So I want you to imagine something, right? You built a career, you built an income system, you are earning money, you're doing well here in Canada, and all of a sudden you wake up one day and you can't work. You cannot go to work, not because you don't feel like, but because of illness, because of a disability. It keeps you out of work for months, 6 months, for 1 year, out of work. What happens to your income within that period that you cannot work due to illness? This is something that a lot of Canadians never think about until it's too late. So here are some numbers that most people find uncomfortable. Statistics Canada has it that 1 in 3 people will experience a disability that will keep them out of work for at least 90 days during their working life. Wow. And yet, ironically, most people that I work with do have vehicle insurance and home insurance, and yet they do not have disability insurance. Guys, this logic does not hold water. We protect against the less likely events, but ignore the more likely one. Disability insurance is not a one-time thing. It's not like a short-term loss. It's actually a prolonged loss, especially if you have a long-term disability, because things like the mortgage don't stop coming if there's disability. The house rent is going to be paid. Of course, the mortgage will be paid. The school expense is going to be made as well. The car payment, of course, is going to keep coming if there's disability. So what is the solution? Disability insurance is an income replacement coverage. What it does is perhaps you earn around $10,000 a month and there's disability, you can get as much as 70% of your monthly income paid out to you while you're going through that disability period, right? So this is a way of ensuring that you can meet your monthly expenses even with the disability. Now, don't think of it like an insurance product. Think of it like a financial asset protection, because your income is an asset. I'll give you an example. If you're 40 years old and you earn $150,000 today, now, and you plan to work until age 65, it means that your income value up to age 65 is actually $3.7 million. Now, if someone told you they had an asset of $3.7 million and they don't have any protection around it, what would you say about such a person? Most professionals that I meet actually tell me that they do have disability coverage. And yes, they're right, they do have it, maybe kind of sort of, because most employers actually provide disability coverage. But one thing to note is that we need to reach out to the HR and read those disability coverages in details, because most of them come with several limitations. One of the limitations I've seen is that group coverage actually protects the employee while they are still under the employment of that employer. What this means is that if you leave that employer, the coverage ends, right? The second limitation I've noticed is that most coverages cover up to 60% or 70% up to a monthly maximum. Now, for high income professionals, if their monthly income is more than what it covers, it leaves room for more. The third limitation is that group coverage benefits are generally taxable, which means that even though you get 60 or 70% coverage in case of disability, that amount is actually taxed. So you're going to get significantly less than you actually need on a monthly basis. I know this might sound like it's not a big deal, but if you need to draw on this disability, I tell you from what I've seen, it's usually very significant. Now, personal disability coverage actually takes care of these three limitations. Number one, it stays with you regardless of the employer. Number two, it can be sized to cover your actual income. And number three, when you pay for these premiums for this disability insurance from your personal income, when you receive the benefits, where if something happens, those benefits are going to be free of tax. When you're buying a personal disability insurance, the most important thing to check is what they call the definition of disabilities. So there are two primary types. Number one is what they call own occupation. Now, this means when you're unable to do the work in your specific field. when you're unable to perform the duties in your specific field. I'll give you an example. A doctor or a surgeon who develop tremors might not be able to conduct surgery. So that means that the disability insurance will pay out, even if theoretically he might be able to do other jobs, right? But the fact that his job is to do surgery, and because of that disability, he can no longer perform surgery, the disability insurance pays out. And that is called own occupation. The second type is called any occupation. In this case, if you're not able to perform any occupation that you've been trained for or you have education for. In the same example, even though the doctor cannot perform surgery, he can also be a medical consultant. In that case, not being able to perform surgery will not pay out. Now, own occupation disability insurance is typically more expensive in terms of premium than any occupation. Correct. So, quick question: how much disability insurance do you actually need? Now, a rule of thumb is that if you take your income and then you subtract any expense that you would not make if you had disability, that gives you an insight into how much you would need. In a nutshell, another thing you might want to do is that most work insurances or most work disability insurance covers up to a maximum. Perhaps the maximum is $6,000, and then if you look at the difference between that and what you actually need, if you had on a monthly basis, if you had any disability, that will give you what you need to get as personal disability coverage. So I'll give you an example. If your monthly income is $10,000 and you have like work-related expense like work lunch or things like that cost you around $1,500, you would not make that expense if you have any disability. So in that case, you're going to have $8,500, and perhaps your work covers up to $6,000. That difference of $2,500 might be what you need to get on a personal disability insurance coverage plan. Let me tell you specifically who should prioritize this conversation. So who is this for? If you're a self-employed professional, like you're a doctor, you're a lawyer, accountant, consultant, and you have no group plan whatsoever. In other words, your income stops when disability hits, you need to have this conversation as soon as possible. If you have dependents, you have parents, children that depend on your income, right? And your income stops when you stop working, you need to start having this conversation immediately, full stop. I've seen a lot of people try to put this conversation for later. I've seen things happen because they took that decision. I would just advise you that this is not a conversation for later. It is a conversation for now, because when the risk materializes, it is already too late. Most insurance companies are not going to get you coverage. Alright guys, if you've made it to this video up to this point, you now understand disability insurance more than most Canadians who has been in Canada for a long time. So the next step now is to book a review. So in the review session, we're going to look at your income, your monthly expenses, your coverage at your workplace, and then we see where the gap lies and tell you exactly how we can fix that gap before it's too late. The link to book that session is in the comments below, but perhaps you're not ready to have that conversation yet. Hit the like button and make sure you subscribe. Every week, I post content that help us understand unique financial concepts, particularly for professionals and immigrants. All right, and this is just the information you need to make better financial decisions. All right, guys, make sure you're subscribed. Until I see you next time, stay switched on.